Good evening. Ira Epstein with your Metal Market Wrap-Up, and this wrap-up is for Wednesday, and we're sitting here now on the 15th of February, 2023, 6:10 p.m. Central Time. Now, it's a crazy market. I was writing my market letter this morning for traders, and I'm telling them, no matter what they do, and they were breaking stock indices when I started putting the market down, I said, when I look at the charts, what I think is going to happen is the market will say it'll find support at the 18-day average and rally back. I said every break in this market is a tale of two worlds. Example, the dollar index up 71 points, driving the market towards the 104 level. Remember, it was down to nearly, 101 just recently. Breaks the gold market, breaks the silver market, takes the copper back down to the 400 level in it. But the stock market looks at the same identical thing and sees a different world. It sees buying opportunities. Hey, everything's good. CPI numbers red hot. Doesn't really matter. Labor market red hot. Doesn't matter. The economy's so strong that regardless of what the Fed does, this market will keep going up. Something's out of kilter. I don't know what it is. So I went looking at the stock indices, and we'll cover them as we get into that part in our evening wrap-up. But it is an interesting event. On the energies, I'm getting the exact type of chart action I wanted out of the gasoline that I had written about. So it's exactly coming in as I wanted it to do. But the strength initially put all these markets lower today. Look at what it did to cotton. So goods priced in US dollars abroad are saying, hey, dollar's very strong again. It's not the best place to be buying things. And they're feeling the pressure. At the same time, the same event, the stock market looks at it and says, hey, we're in great shape. If you look at the earnings, the dollar's actually a bit lower than it was in the last quarter of 2022. It's still under that. The earnings came in. The companies are looking overall very good. We're seeing the tech companies cutting people. It's only going to get better from here. Which side of these are going to win out? And that's not even to say that the Fed's probably looking at it saying we have the ammunition to go higher and stay longer, but the market doesn't believe the Fed. That's where you're at. When we look at the gold market, I've been talking maybe we can get to the 1812 area and a little bit lower. I've been saying that all week. Actually, last week I began it. Well, I feel we're in the ballpark. You got as low as 1820, 820 now, so I'm not too far off. Whether it hits that exact number, I don't care. It's been coming down there, and that's what I said could happen. You're dropping away right now. You've got the pattern of lower highs, lower lows. Now that 1812 has dropped away. And that's what happens. As each day goes by, the average is dropping lower. So that makes sense. But where's the Bollinger Band? Because that's the most likely target. It's in eyesight, 1825.80 if the market wants to reach for it. So I'm going to contend, and I've said this to you each night, this is the zone that I'm looking for the big bottom to shape up in. Did you hear that word? Bottom to shape up in. That's what I think is going to happen. No, I don't go out and tell my traders, buy the low. I'm not throwing a dart and saying that's it. But chart-wise, I can do that. Then I wait for the setups to come in as to what I think might be the interesting play. I say that because you have the bearish embedded reading. And as long as that's there, you keep coming down. When it's lost, it'll be my signal that the market's going to make a run back to wherever the 18-day average is, but we're not there yet. So be patient, but it's around the corner is the way that I want to phrase it. The gold silver has not turned at all in silver's favor, and the silver market staying down. Again, that bearish embedded reading. Yesterday I talked about embedded readings. Whether you want to take it or not, that course, that's up to you. It'll change your trading. I'm convinced of that. Lower highs, lower lows. I'm looking for the support still at the 200-day average to the Bollinger Band, and now on rally some resistance, ideally at the 2190 area in the market. In the copper market, in tonight's update, I took an article, I think it's out of the New York Times, by the way, And one of the writers there did some extrapolation as to what China says. By the way, they're claiming about 84,000 people have died from COVID since the zero policy was released on things. And they're looking at it in terms of what China has said. The extrapolation in American terms is about 1,000,002 people died. Other terms, about 1,000,005. The lowest I saw, and steadfast, good extrapolations is about nearly 1,000,000. So that could explain why copper's not getting a bid and the energy markets aren't. They've got to get through that. It's a very serious event. We all expected it. I mean, they weren't vaccinated well. Then they opened up the country for the lunar holiday. People went traveling. It spreads, and away you go. One of my good friends tonight just called them that they have COVID again. But again, it's to us like the flu now. And I just had my physical with my doctor, and he was very honest. He said, Ira, I don't know when we'll get the next vaccine. I'm up to date. And he said, I'll let you know. He said, it's that simple. He said, I know it'll come. It'll probably come in the fall. And it's just going to be a yearly event until it isn't an event. He said, but it's like the flu. It's probably here to stay. Boom, away you go. Still dropping away in that market. Palladium the same. But this has all been happening as the dollar's been getting stronger and the lack of the Chinese buying, which makes all the sense. So you can put at least 2 and 2 together there. I think you're getting overextended in the palladium. Maybe you'll get the embedded reading. It's not there yet, but you're already having trouble getting to and staying under a Bollinger Band. And in the dollar index, I'm going to look for resistance right in front of us now at the 104.21 level, the upper Bollinger Band. Now, a lot of these markets aren't letting you in on terms that make sense in terms of dollar risk. It's okay. You can't catch every trade, and sometimes the charts just let go one way or the other, and you're forced to just say, I'll wait for the next bus. And that's the beauty of trading. Just like there's a plane schedule, a train schedule, a bus schedule, there's always another one coming. You understand that? You patiently wait your turn, make sure you have your money ready to go, and you wait. This is a daily waiting for your turns to come. Not every trade's going to work, but you take very small risk as you're playing with it and see what it'll offer. We talk about this and a lot more in our futures trading kit. I put this together. It's meant for the more advanced trader down to the beginning trader. We'll get you going in ideas as to money management philosophies. All my free offers are in here, by the way. Our charting software will get you set up. We'll get you set up with this if you want to get my updates, the morning subscriber videos, everything that you possibly want, popular chart patterns. And then we're going to get to the pivot point course, the Arun indicator courses in here, free. Those courses are included in all this. This is super important, cause and effect. I developed this when Paul Volcker was around and updated it through other central bankers, but it really teaches a lot. Then we link into all the CME Group courses. They're free to you. So how do you get all this? It's simple. All you need to do is go to iraepstein.com, free offers, move your cursor up here for free offers, or call my staff. It's a great little course. I think it'll help you, and there's a lot in it. I'm Ira Epstein. You have a great day. I'll see you tomorrow.